hundreds of millions of dollars, and that, that's all he lost.
So it was, I think they called it like not correlated with the market, somebody said, right? So he's on his own track, and generally speaking with these big money managers, they're connected to the market somehow. Like at the end of the day, if you're running a regression or a correlation, you should be able to find a link.
Well,
so
it
was
wasn't just the
uncorrelated.
price to correlation, it was the volume correlation.
Yeah.
A lot of times the market simply wasn't made to be able to handle the purported volume he was doing.
There was no such volume.
Especially in the options. They're like, no one's going to consistently take the losing side that many times in a row.
So I think that's where we haven't really talked about the difference between an over-the-counter market versus an exchange-traded market. But for many derivatives, an over-the-counter market is just it's a privately negotiated contract between two firms. So that you just have to find a counterparty who's willing to take the other side of the trade. Exchange-traded markets, there's a limit to the amount of size that any one trader can do. Like the exchanges protect themselves by putting in place position limits. So you can't dominate the market. And that, by the way, happened after the, what was it, the silver?
Yeah. Yeah, the Hunt brothers.
The Hunt brothers.
The Hunt brothers. It was after them.
Cornering the market.
Yes, where they were cornering the market. So putting all these safeguards in place after that. So you can't dominate the market and take the market down. So what they're saying is basically the exchanges didn't see that kind of volume. It didn't exist. There wasn't no such trades. And there's no counterparty that's willing to take such a big trade. So there is no such volume that's out there. And yet he's showing trade after trade. In fact, wasn't one of them where they contacted like the DTC or somebody and asked for the trade
over the period, and they said no, they didn't report anything.
There were no trades.
They were just like, oh yeah,
and they didn't do anything about it. What was that?
Didn't they take Madoff's records instead of?
That was
yeah.
That was like the second. That was like the second one or something. I think they talked about like the.
I think they drew up a letter. But they never sent it.
And they never sent it.
That was a different one.
They did that several times.
That was the other time they screwed it up. Like,
or they would draw up letters. They did that more than once, I thought, where they drew up letters.
It's in the file.
Cabinet.
But they never sent it.
So
So
there was a personality conflict between the chief of the Nero office and
that's the other guy's job
so
on the team.
they didn't like the guy making the complaint, so they just blew it off.
so that was just
It's not a red flag.
No,
It's
but
just
that's the
more
basic.
incompetence.
One of the problems was personnel issues at the enforcers.
Marco Polo.
Markopolis. It's your Greek, right?
So we're starting in confidence with the SEC as a company.
That's like Marco Polo. Marco.
Just a little minor detail.
So these are the red flags. Didn't we say something else and I didn't write it down?
Well, I had one that was that he told everybody, don't talk about it, that you're investing with me.
That's right. It was a big secret.
Which is completely, I've never known a money manager who does
Yeah,
that.
don't tell anybody and don't tell your friends.
Yeah.
Right? Don't even tell your friends.
No email trail at all.
Yeah, he didn't
No
use
email
emails at
contact
all, right?
with his clients. Yeah.
But he did keep two sets of records.
records,
though.
yeah.
I thought that was weird because he always kept one record
computer.
on him at
On
all
him.
times. Yeah.
And that's
they're
actually a
doing
big
many movies
violation of.
They never had that secret hideout or anything.
Yeah, the laptop that has a handcuff.
Handcuffed to his.
I think another thing was that his fee structures, so he was like just making a commission, but he wasn't charging the standard fee, and everybody was like, he's just not being greedy.
He said he was not being
Yeah, that's what
greedy,
he
right?
said. Yeah, he's not being greedy.
Why are you taking
was
the money?
As a billionaire.
It's okay, I make enough.
So he had unreasonably low fees. It wasn't market at all. Were there other, well, I guess the complaints and the letters and the articles, right? I mean, that should be a red flag right there. So if people are claiming
that whole
foul.
report was a red flag. The whole thing we read, like every other sentence was something going, oh my God,
Right, yep.
like this really happened.
Yeah,
And it happened like
the
this.
complainants were really high-profile investors. I mean, one guy pulled $5 million, and the other guy they said it had billions or
Right.
several billion. These are people who decided.
So they were
didn't wanna work with
knowledgeable investors themselves. These
None of
weren't.
these guys were like, oh, I lost $500.
Right.
Right.
Yeah.
Like, man, he scammed me out of my $4.
That was another red flag, is that you had to like know somebody. It was
It was a
The
club.
club.
So entry, there was restricted entry.
I think when his veins were popping out of his neck, that should have been.
Yeah. But then he also said he knew how to time the market and how to
Yeah.
sort of
It's
pull it
based on
out.
his
And
gut.
So it was the
Well,
top.
and
put it in treasury notes and all that.
Well, and he was making all this money with his. I don't remember seeing where they actually talked about his method or what he was doing, but they on several occasions they reported it as being a pretty
It's relatively simple.
simplistic.
Yeah, it was a simple. I think I wrote it down. It was a split strike conversion, which I don't. I know what it. I know what trades he did. I just didn't realize it was called a split strike conversion until I saw this. But it was really. It is actually pretty simple. For those of you that are interested, if you buy a stock and you go short a stock, for the most part, you can't make any money, right? I mean, you're buying and selling the same thing. But if you buy the stock at one price and you sell the stock at another price, and so you go long and you go short, well, now there's a possibility that you make kind of like the difference. Well, what he was doing was he was buying a stock, and I'm going to do more of this when I get to the very last unit where I look at the payoff and profit on a stock. But for the time being, some of you might understand what I'm talking about when it comes to derivatives. If you look at what the stock would do at the end of the trade period, if you say you bought it at this price, so you bought it, now, and then a month from now, it's still trading at 30, your profit is 0 on just the stock you bought. If the stock is now trading at 35, you've made $5, right? And if the stock is trading at 25, you've lost $5. So this is what your profit profile looks like just on the stock you bought. This is kind of like a what if snapshots. That's pretty clear, right? A call option gives you the right to buy the stock. So you pay a premium for the right to buy the stock. So if I buy the right to buy the stock at 30 and the market ends at 30, my right is useless. So it's really a 0. It's right there still. And I think what he did was, he went long a put and short a call. If I buy a call with the strike price of 30, so I have the right to buy the stock at 30, and the stock finishes at 35, I now can exercise my right and I make $5, right? The counterparty, my other party, they're out $5. I don't know if you can, right? They are forced to sell me a $30 stock, something that's worth $35. So they're out $5. So for every dollar I make, my counterparty loses $1. So what the counterparty profile looks like is this. So for every dollar that the market goes up, I will exercise my right at 30, buy it from them, and they're going to have to sell it to me at 30, but the market's more than that. They're going to have to go buy it at some other price and sell. Well, he was the counterparty. He was the short stock. He was the short the call. He had this profile right here. And let's actually make it a different, it was like there. And then at the same time, he bought a contract that said he had the right to sell the stock if the market were to go down. That's called a put. So he would short this call option where he gave somebody else the right to buy from him. And then at the same time, he bought a contract that gave him the right to sell the option. So he could short he went long the put. And a put is it's a contract where you have the right to sell this thing at whatever strike price we agreed on. So in this case, let's call it 25. So if you have the right to sell at 25 and the stock ends up finishing at 30, your right is useless. Right? So it just expires worthless. It's no good to you to sell at 25 if the stock's trading at 30. But if the stock's trading at 20, now the right to sell at 25 is looking pretty good. So it's now in the money. Okay, so every dollar that the stock goes down, your contract is $1 more profitable. It just gets better and better and better. 45-degree angle, it looks like this. So if the stock goes down, your put is now valuable. It's in the money. If the stock goes up, your call loses money. And right here, nothing's happening. There's a split strike. There's two different strike prices. Well, I don't know if you can look at that and remember your old algebra, but when you add lines to one another, right? If you just add lines, you're kind of canceling itself out. So if the market goes up, you make money here, you lose money there. And if the market goes down, you lose money here, you make money there. And there's this little bitty gap where you might make a little and you might lose a little because the options aren't quite in the money yet. And I know it sounds, what I've done is like tossed a bunch of derivatives at you, something I won't talk about again until our last week together. But it actually is relatively simple. They're just contracts that let you make money if the markets go up or make money if markets go down, and the opposite side of those, lose money if markets go up or lose money if markets go down. So he did effectively bought a stock and sort of sold a stock. It's like a synthetic short stock position with this little gap. There is no way you should make millions of dollars doing that. It's way, way, way too simple. There's just no way you should be able to make millions of dollars doing that. But that's what he was saying. He was saying that he always picked the right prices. He always picked the right stuff. So really, you can never always time the market. You cannot do something that everybody can do. This is like, you can go out and do this right now yourself. Just open a Scottrade account. It's just not feasible. So red flags. The fact that there's no volatility at all is a big deal. What he did wrong are problems now. So basically, what went wrong with the investigation? So let's list some more issues here that were wrong with the investigation now, like the SEC side of things. What else did they do wrong?
There's no interdepartmental communication.
Yeah. What they called silos, right?
Mm-hmm.
That's a buzzword in business, but we all know what it means.
Inexperience.
Yeah, rookie investigators.
Yeah.
They were inexperienced investigators. What was that?
Too many rookie mistakes.
Rookie mistakes.
It was
Yeah.
also like inconsistent focus of the investigation.
Yeah.
Like the complaint would come in, and then they would go in and investigate something else.
And with a big lag in there too, it seems like the complaint would come in, and there would be months of nothing happening. And then when they would investigate, they'd investigate something that's fairly simple. So
It seems like they would get something from, like, say, that the Inspector General's office says you're not focusing on this. So they say, hey, we got a complaint about this guy doing a Ponzi scheme, but yeah, well, that's really nice, but we really want to look at this whether he's a registered investment advisor or not.
Right.
You know, cause
whether he did his documentation right.
Yeah, it's almost like in getting investigated for Al Capone for being a gangster and worrying about whether his car registration was up to date.
That's exactly right. It's exactly right. Like worried about whether his driver's license is up to date.
He was so able to there was undue influence too, whether it was through fear of who he was, his power, his influence. But, you know, I just don't buy this nepotism that was completely dismissed. The fact that his niece, who was implicitly involved in his operation, dating or married the head of the SEC or the head of the region of the SEC or
Something
whoever
like
it
that,
was,
right?
I find that so hard to believe that maybe these inexperienced teams weren't assigned intentionally. And I realize the OIG didn't find anything.
Right. But
Personally,
you're
it just
a
doesn't pass the
cynical
smell
view
test.
of this, that how could they not have somebody had to know? And
I wonder if they're
that's
still
what they're
married.
saying, is that it was not done with any malintent, that they were simply bumbling idiots.
Right.
Yeah.
He had an awesome accountant.
Huh?
He had an awesome accountant.
But he's the one that made up some of these numbers himself, right? Like,
Well, the accountant did, didn't
the accountant.
he? Yeah.
So they the numbers didn't make sense.
But he
Or
made them,
the
yeah.
stuff they reported didn't make sense.
That was a red flag too. that with all of these trades, these incredible volumes of trades, they couldn't do anything other than say the average number.
Average
for the-
numbers.
for the
So they
actual-
couldn't give detailed
Detailed
stock.
buy, sell, just average daily prices, and then cash positions at the end of the month.
Yeah. So you couldn't.
It was
they
always
could-
in cash at the end of the month.
So you could always liquidate and make money, always. So yeah, so undue influence. It seemed like he was kind of a bully, right? Like he kind of bullied, and they allowed themselves to be bullied, and even the people above them basically said back off. So he was basically a bully, from what it looked like to me.
But he provided his investors like statements consistently every few months and stuff like that.
So he was
you know,
dressing it up nicely.
And employees were sending it out for him.
What were they doing all day? That's what I want to know. Is what were they doing all day? It's like, hey, got another check. All
Yeah.
right. You know, I mean,
What did they
weren't
do in the
investing.
afternoon, right?
They were fabricating, I guess. Is what
Well, apparently,
It's hard to live that lie. It
they
takes a lot of work to keep that up.
actually had like a legit business. It was like they had like the top floor was where all the chicanery was going on, and apparently only like Madoff himself knew what was going on, and everybody else in the club did not know nothing, and they were actually running a legitimate business supposedly.
Yeah.
Only thing I couldn't figure out, and I don't know this, I don't remember the story well enough, but did he go in? Some of these guys in Ponzi schemes, they'll just do this to cover up big losses. They'll put on trades and they'll get smoked on the trades, and then the Ponzi scheme arises because they don't want to actually own up to the losses, so they'll start paying out with the funds that come in. Was it just malintent going in, or was it the result of something that he was covering up? I didn't know that.
notice any big problem that needed to be fixed. Did anybody else notice all that? I mean, it was a lot of pages, so we may have missed something.
Because they weren't quite sure when it started anyway. Like, because even he was not really accurate with when he started doing it, because sometimes he said he did it in the 80s, and then other people said it was the 90s.
90s.
And then one thing said that it could have been even as soon as like 1976 or something
when
like
he first started. So we can't tell, I guess,
Yeah, so I
whether
didn't know-
there
I
was
didn't
a
know enough
loss
about the
that
story.
needed to
Maybe
be
it did
fixed.
come out in the investigation or something, but the piece didn't mention anything about it, and I didn't know.
And you're right. That's where, I mean, a lot of times fraud happens unintentionally, where somebody wants to fix a bad bet,
It just spirals out of control.
and then it just gets worse. So did you ever see the Rogue Trader, the movie The Rogue Trader? It's Ewan McGregor, and it was the story of Nick Leeson, who he was in charge of both the trading operation and the back office reporting.
Oh, jeez.
So that's like the person writing the checks and reconciling the books.
Was he Credit Suisse, or who was
It was Barings Bank in London, Barings Bank, which is no longer in business because of him. But this was the bank that financed the Napoleonic Wars and the British monarchy, and this is the bank. And he single-handedly took them down. But he was in charge of both, and he would end up trying to fabricate trades to cover up any kind and double down losses, trying to fix stuff.
This happened in China, like 4 or 5 months ago. Did you guys read about this? The people stole the money out of the bank, went and gambled it, won all this money, then lost it, and then went back and tried to steal more money, and then they all got executed. So.
Well, the Nick Leeson case was in Singapore, so I don't know.
At least they were upfront with their intent, right?
Yeah.
Yeah.
So
I also was reading with Madoff. When I was reading this, I read some other stuff. It was saying that when he was growing up, his father had like a lot of failed businesses, and his father always was like in this a lot of debt and things like that, and so that he was just sort of like, I'm not going to be like my father.
So he was just going to try to show wealth, whether or not there was wealth.
He literally created his own success, right?
Yeah.
Sell my soul and.
There was one sentence, by the way, in there when it all came down. Aside from, I think DTC finally did kind of come out and verify that the volumes weren't what they should have been, and he was surprised. I know he said he was surprised, but I think that is, as the market started to crash, they looked more intently. But didn't his sons Didn't his sons actually expose it? I know one ended up killing himself, but they were the ones that came to the forefront.
That came
and
out.
said,
I do remember when the one committed suicide.
Yeah.
So,
But I
is
mean,
that
they
right?
were actually the ones who
They were the whistleblowers.
They saw it all coming down, and they were the
And they
ones.
reported
maybe
it.
they thought they would get some kind of forgiveness for.
Yeah.
Did
I don't
they
know.
actually report it, or did they just approach him about it? Because I couldn't quite read into that. If they had actually turned him in,
I
or if
think
they just encouraged him
I'm not
Kind of
sure
by
actually
force, like-
myself.
I got the impression, and I might be mixing articles now because I was looking at some other stuff too, but I got the impression they actually called the SEC.
Okay.
So you think that's the case too? Because I don't
SEC probably
remember.
Didn't do anything anyway.
Yeah.
What?
It wouldn't matter.
Oh, yeah.
It wouldn't matter.
Made no sense.
These for years. They're just pranks. Shut up.
No, they went
gave
to
us
the,
an
they
account
went to the
number.
NYPD. They actually
Fine.
Speaking of suicide, one of the hedge funds managers that was one of the biggest clients for him, he had charities. A lot of the charity funds were funded to burn off. That the hedge fund was vouching that Burdoff was right, and he said at the beginning, "This is all a lie." Then, I'm fully invested, and that guy ended up killing himself 2 weeks after.
Was that the guy? Was that Avon Lino and something, or
No.
somebody else?
That was like in 2008.
Okay.
So when it all unfolded completely, one of the hedge funds.
So there's a TV show that my family likes. It's called Leverage. Have you guys ever seen it? It's on. I think it's TNT. It's like a group of people that they like put together like a sting to. It's like an A-team, but all. You've seen that.
Yeah,
So
yeah.
they've taken this story several which ways, where they try to create like a false scenarios just so that they can win money back for the people that lost it. But this has become like the stuff of fiction repeatedly. It's fueled other TV shows. The last thing I wanted to talk about is actually Ponzi himself. Does anybody know the story of Ponzi?
Yep.
So you've come across that. He's it was, I think, investing in like postal stamps or something.
Arbitrage.
Was it the 20s or something?
Something like that. And he was a very charismatic guy. If you read the story, there was a big article about him in the Wall Street Journal some years ago. What was that?
I said with a last name like that. I mean, you know.
Very charismatic. And they would send police to investigate, and the police themselves would end up investing with him. He was so credible, right? And that's what I read here. I think it was page 14. They characterized Madoff as a wonderful storyteller, a very captivating speaker. He had an incredible background of knowledge in the industry. The examiner said he found it interesting and also distracting because they were there to conduct business. He could actually divert their attention. So he was that charismatic of a guy. So I thought that was, like when I read that, I thought that was Ponzi, like the actual guy, right? Just he's alive again. I think, did we miss anything in terms of problems?
There's only one thing I didn't understand, and I'm trying to find it, and I can't because I'm trying to do it quickly, but there was a comment made that half of the people who invested with him did not end up losing money.
Oh, I don't know if you mean at the
trying to
end when
find
they
it.
had to unwind everything and people got like
Everybody
cents
under
on the
$1 million,
dollar.
everybody got at least $1 million back. Below that, got all their money back or something like that.
So they were able to make good on the little accounts. That's what they did.
This was like the one story where not the little people didn't get screwed out, the actual big rich lost all of it. And they give that to, same thing with Ponzi and Madoff. Ponzi got investors that were similar to him. He was in Italy. From Italy, he was an immigrant.
Yep.
So most of them were the ones that got invested, and Madoff was Jewish, so that was his community.
That's right.
Rise up. That was how the investors became about. So Madoff got into the country clubs, and those are the people that got invested with him. And then
So that was his network, and he was credible because he had a similar background. So
it's called like
so
the
they
social
trusted
loop,
him.
the social loop, where he actually has people marketing his services.
Right.
Friend.
Yep, the whole network. I think the only other thing I noticed here in terms of problems, I think at some point here I noticed that when they investigated, the investigators went in skeptical. Like they themselves didn't believe the story that they were about to investigate. So it's like they went into it with preconceived notion that he was innocent. So that just kind of tells you that it's amazing how we can color our world based on what we believe up front. You know. I mean, like teachers can do it with a student. Like you assume the kid's a smart kid, so you give them every benefit of the doubt, right? And meanwhile, somebody may have been cheating and cheating and cheating their way up, but you give them every benefit because it's a smart kid. Like you just don't want to believe that about the good kid or the smart. And then likewise, the kid that's always in trouble. You just assume whatever, and so you just keep. And so that's what this was. He's a winner, so he must remain a winner. So I just thought that was kind of an interesting thing too. He didn't fit the profile of a Ponzi scheme.
Mm-hmm.
They just didn't want to believe it.
Love to know what a Ponzi schemer looks like.
Right. Which apparently is somebody with a fetching smile and a very winning personality, I think is what an actual Ponzi scheme is. But I'll tell you, like even, I don't know if you've ever known people who have been caught up in financial scams. I remember this back years and years ago in Pennsylvania. We knew people that were getting involved in some investment that they had to keep bringing in their friends. And I mean, I've got a finance degree, so I'm saying, well, can I just see the documents that you guys, like let me just take a quick look. And I read this stuff and I thought, they're not selling, there's no product. There's nothing for sale. And I'm not talking about the Amways and all that. Like people have always complained about that stuff. I'm not talking about that. They were selling like goodwill of some, like there was nothing there. And the words, like the sentences didn't really make sense. And I thought, this is a Ponzi scheme. And everybody, like I knew, they were making all this money. And I called the Attorney General. And I said, listen, I think people are getting caught up in this thing. And their answer was, well, none of them are complaining, so we're not going to investigate. And I remember that clear as a day. And they just wouldn't, like the people I knew involved in it, they're like, oh no, this is a sure thing. Right? Like they would not, they just would not believe me.
Was that in North Carolina?
It wasn't. It was up north.
Because there was a thing in North Carolina. It's called Zeke Rewards. That was a Ponzi scheme. It was about 3 or 4 years ago.
Oh, really?
Yeah. It was. I knew someone who did. Some money. No, people came into me. I was like, "This is." It was like the returns were like 30%.
Yeah, it was something. And like everybody brought in friends, and then they made money, and then they brought in friends, and it just kept going. And I called, and like nobody would believe me, and the folks I knew that were in it just wouldn't believe me either. So I ended up dropping it, and I think they definitely lost whatever money they had. But anyway, all right. Well, I think I will read your I'll read your assignments then this week. And what I typically do is I will usually select 1 or 2 that I feel like were the most representative answers, and I'll email and ask if you don't mind if I can share that with the group as kind of a guideline answer. And I'll do that throughout the semester then. So if I can, I'll ask your permission. I won't ever post something without asking you, because you're free to say no if you don't want to.
I got one question. Mm-hmm. Excuse me. You put in all this money. Mm-hmm. He doesn't invest it. Mm-hmm. Everybody puts in their money, and he pays everybody. And I get that you have to have a continuous flow of investments or the whole thing falls apart. Where's the money go? Where's the money? What's he using it for? Is he buying jets?
Like $200 million in his account.
Is he buying jets with it?
He pulls out some of it as it's coming in.
But there were billions of dollars.
Yeah.
So he spent it all?
Well, till he pays the next one, and then you pull a little out, and you use the money to pay returns to the next one, and you keep skimming.
Just skimming, nickel and dimes here and there.
$1 million here.
So that you can keep floating everybody else.
Yeah. So you just keep it up.
Large nickels and dimes.
Yeah.
So did people like pay taxes on fictitious returns all those years, basically?
Yeah. That's a good point. Yeah.
So it's like issuing like 1099 INTs or whatever, DIVs. And
yeah.
That's the thing. The people
and their government's collecting.
The investors in the early stages made a ton of money.
Right, because they just kept collecting.
The argument was, do these people that originally made all this money have to pay back to the people that lost it? Because they made money off of the whole scheme.
Right, right. Because now all this time, every year, they're earning this consistent, crazy return.
Get involved.
Yeah.
That's right. So that's the moral of the story: is get in quick.
I don't think that's the moral of the story. No, I don't think so.
Hear about it. Ask how long it's been going.
Is that what you heard? Is that all we heard?
Wait.
Is this what I did?
You just started yesterday, right? I mean.
That's all we heard. After all this, that's all we heard.
Stay until you realize and then get out.
I know when to get in and get out.
We're in business.
Got the time to
Yeah.
That's right. I just use my gut to time it. So, yeah.